A lot of Americans are moving to Dubai, starting companies overseas or expanding internationally. But no one talks about what really happens with your taxes. Today, I'm breaking down 3 advantages of being a US citizen working internationally with a Dubai-based CPA, 3 disadvantages of being a US citizen doing business internationally, and what you should do right now if you're thinking about going global. Stay to the end because misunderstanding this can cost you 6 figures. First advantage of working with a Dubai-based CPA is strategic global tax planning. As a US citizen, you are still connected to the US financial ecosystem. And when structured right, that's powerful. A Dubai-based CPA understands both US requirements and Middle Eastern opportunities, helping you reduce taxes legally, leverage exclusions, avoid double taxation, and build wealth with strategy instead of fear. The second advantage of working with a Dubai-based CPA is compliance confidence. When you operate globally, the paperwork gets more complex. FBAR, FATCA, foreign structures, overseas income reporting. A Dubai-based CPA keeps you compliant so you can scale, relocate, invest, and expand with peace of mind. The third advantage of working with a Dubai-based CPA is access plus opportunity. Dubai gives you unmatched international opportunity, which includes networking, investors, zero tax environments, luxury markets, high earning potentials. Being American still gives you strong credibility, systems, and banking ties. When combined, it's a wealth building powerhouse. First disadvantage of being a US citizen doing business internationally is that worldwide taxation still applies. Yes, even if you're in Dubai. Yes, even if Dubai is tax-free, it doesn't mean you are. Treasury Regulations 1.1-1B states that US citizens are taxable on their income from sources inside and outside the United States. And courts have backed this for over 100 years. The Supreme Court upheld citizenship-based taxation in Cook versus State, a US Supreme Court case decided in 1924. The court ruled that the US can tax its citizens even if they live abroad permanently because citizenship creates a continuing tax obligation. This applies whether or not Dubai taxes you. There are relief provisions like foreign earned income exclusion and foreign tax credit, but these reduce tax. They don't eliminate the obligation to file. The IRS still expects US filings every year and possibly taxes unless you structure like the wealthy do. The second disadvantage of being a US citizen doing business internationally is complex filing requirements. International business brings more compliance. If you miss one critical requirement, you can face penalties that start at $10,000. This is why having someone who understands both sides is non-negotiable. The third disadvantage of being a US citizen doing business internationally is no more hiding money. When I say no more hiding money, I mean this. We now live in a global financial system where governments share information. Offshore secrecy is basically gone. If you're American, assuming that opening an account overseas keep the IRS unaware is dangerous and outdated. Between FATCA, international reporting agreements, and advanced banking compliance systems, US citizens are more visible than ever to the IRS. Under FATCA, most foreign banks will make you complete Form W-9 when opening an account, and those banks report your financial information back to the IRS through Form 8966. On top of that, US citizens must file FBAR and possibly Form 8938 to disclose foreign accounts. Trying to hide money is risky. Legal planning is the only smart strategy. If you are a US citizen, these are the 5 steps you should do right now if you're thinking about expanding to Dubai. Step 1. Stop assuming Dubai is tax-free, so you are too. Again, the IRS taxes US citizens on worldwide income. Don't rely on influencers, friends, or rumors. Get real clarity. Step 2. Work with a CPA who understands both worlds. You need someone who understands US taxation, UAE, and international structuring, foreign earned income exclusion, global intangible low tax income, foreign bank account report, foreign account tax compliance act, and control foreign corporations. The wrong advisor can cost you money or get you in trouble. The right one protects you. Step 3. Decide your path. Are you relocating or just expanding business globally? There's a huge difference between these 2 paths, and both require different strategies. If you are relocating, look at residency, exclusions, housing rules, lifestyle. If you are expanding, look at entity structuring, where value is created, how income is sourced, and legal optimization. Step 4. Structure before you earn. Wealthy people don't make money and then figure out taxes. They plan before income hits the account. Don't Don't wait. Structure early. Step 5. Fix compliance if needed. If you already moved and didn't file correctly, don't panic, but don't delay. Fixing it early is cheaper, cleaner, and safer. Bottom line, global expansion is powerful. Dubai is full of opportunity. International business can accelerate your wealth, but only if you do it smart, legal, and strategic. If you're serious about going global, Dubai is one of the greatest opportunities of our time, but only if you do it right. Most people lose money because they guess, they assume, or they listen to people who don't understand US tax law. If you want clarity, strategy, and protection, this is what I specialize in. I am a Dubai-based US CPA and international tax strategist, and I help high-income US citizens expand globally the smart and legal way. Don't wait until you get a penalty letter. Plan before the IRS plans for you. If you found this valuable, subscribe for more Dubai wealth and international tax strategy content.